we are ready to go. I think we are. Alrighty. So, that being said, let's get the ball rolling. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I'm looking to collect a 1% every single week. Yes, and 1% every single week comes to over 50% by the end of the year. So, I'm in a hotel somewhere outside of Las Vegas. What is it called? Rock City, something city? Boulder City. Boulder City, Nevada. Fun stuff. Anyway, so who do we have tonight? We got Passport Eric, Alan, Terry, Dollar Short, Tony, Rich Credit, Tony Jr. Oh, Tony Jr. Rich Credit. That Guy Jazz, Boat Patrol, The Shop Panda, Robbie Brown, Rachel Jackson, Just Mike, Vance, Doug. What is Trump doing tomorrow? He's probably pissing a bunch of people off. That's what he's doing tomorrow. You're up late. Not necessarily so, because see, I'm on Western Standard Time, or Pacific Time, which means it's late where I'm from, which is in St. Petersburg. But here, it's not that late. It's only, holy shit, it's at 9:47, like 9:45, something like that. Right, Doug, thank you. Bruce, how you doing? Down Badge, Sind Karma, Michael, Rudy, Boogie Repo. Right, okay, so that being said, who do we have? We have nobody down here yet. Oh, turn that one on. That one is, hold on. That one's Instagram. That one's YouTube. That's TikTok, and that's YouTube. All right, great. Fat Boy, Stennon, good evening. All right, so what we're looking to do here is create a strategy. 1% every single week. That's over 50% per year. So let's take a look at what we're looking at. Felix, Bongo, okay. So you guys give me stocks to take a look at. I pump them into the charts here, see what we're looking for, and see if it makes sense. Because I'm looking for a simple, safe, predictable, consistent 1% per week. Now, we're doing what's called covered calls on dividend stocks. Those are companies that consistently increase their profits for at least 2 decades. 2 decades is over 20 years. So we're having a little bit of issue here. Why is that one so low? Let's tilt this one up just a smidge. Not even anybody there at the moment, so we don't have to worry about that one too much. This one, let's tilt this one, looks right about there. All right, that looks good. All right, so first one on the list tonight is going to be Intel. And that was Allie. Want to take a look at Intel. Felix, how you doing? Kai, good evening. All right, so Intel. Let's take a quick gander at this. INTC, right? INTC, Intel. Now, anytime I look at a stock, any stock, doesn't matter which one, I'm always looking at the exact same thing. 5 things to be exact. Number 1, I'm looking for the high right there. The low way over here. Where was it a year ago? Way over there. And where is it now? Right here. Look at this. Sideways, up, big jump. What's going to happen here? Well, we have no idea what's going to happen with Intel. It's at 99 now. So why are we looking at it? It already made the jump. So looking at it now is kind of defeat its purpose. I mean, think about it. Because we're looking for opportunities, not for something that already happened. I mean, this thing already happened the last 30 days. It jumped up nicely. So I don't think it's going to go up again. I mean, seriously, take a look. 30 days ago, we're at 40 bucks. Now we're at 99. That is a 100% increase. Now, you can't always get that because that's not what you call predictable. Companies don't hit 100% in 30 days all the time. Okay. When do I sell? Now, Allie, I can't tell you when to sell. But what I can tell you, Allie, listen closely. It's not a profit until you take it. So it can look good on paper. But if you don't take that profit, it might just drop tomorrow or the next day or the next day. Now, I'm not telling you what to do. What I'm telling you is It's not a profit until you take it. Now, I have no idea who did this. All right, what is that? Come on. I don't appreciate this kind of stuff, so I just got to eliminate that. There we go. Done, done, and done. There we go. All right. Do you own a business? Well, I asked very kindly, thank you, do I own a business? Yes and no. I own a business, but I am retired. So every once in a while, I'll go do something, get the kids all riled up, get them working. What's up, Sancho Man? What's going on? Chill Res. Love Row Car. Okay, not quite sure what that means, but all right. Tom, Cheshire. Good evening, good evening. What I'm looking for is you guys to participate. We're looking for good quality stocks to jump into on Monday. Now, the strategy I'm doing is a dividend stock company using a strategy called the covered call. Now, I'm doing it specifically. Road to 100 grand. I love stocks. I'm 23 today, and my birthday, I have 43 and have invested 18 total. Okay, not a question, but all right. He is real. Put your faith in him alone to save you. Thank you, Yo Dog. Whoa, all righty. So, what are the questions do we got? AI semiconductor. You got to give me the ticker symbol because that actually means nothing to me. Okay, plus elite trader. That means nothing to me also. FSELX. What the hell is that? FSELX. What are some of your top favorite stocks? I would say Macy's, Ford, General Motors, IBM, AT&T, Procter & Gamble, Colgate Palmolive. You know, companies that have been around for a while. FSELX. What the hell is that? I have 670 shares at 21. Okay, you do know that doesn't mean anything until you sell for a profit. Are you successful? Now, it depends on what do you mean by am I successful. I'm saying no to this thing. What the hell is this? It's a bunch of dots. There's no movement on that whatsoever. And there's no options. That's going to be a no. Archer Aviation. ACHR. Archer Aviation. Now, I do have some Archer Aviation. Let's take a look. It was at the high back in October. And in April, bottomed out. Last year, we're at $9. Now, we're at $6. She went up, down, here's the bottom right here. Now we're right about there. Let's zoom into that area. Let's zoom into there. We go. Okay, so your last 30 days, the high, the low, where was it? Where is it? Look at the motion. Down, up, down, up. That right there looks awesome. If I want to do that tomorrow, I want to jump in and buy it. First thing I want to see is, does the chart tell me it's the right time to buy? Because we, as buyers and sellers, investors, we want to buy when the stock is moving up, not when it's going down. Well, take a look. Your 30-day high, 30-day bottom. She jumps up. Now you get your profit taken. New bottom is right here, 2 days up. So if tomorrow she opens up at 6 or higher, I'm going to jump in. So let's see what a 6 could look like. But remember where I'm coming from. I'm 60 years old. I'm looking for a simple, safe, profitable position with no risk or as little risk as possible. So let's do a covered call on this one. That's going to give me roughly, I'm looking at about 1 or 2% that I'm looking for. Because 1% every week is going to come to 50% by the end of the year. And that's basically what I'm looking at. So we're currently at 587. So the 587, I'm going to do the $6 call option for this week. Not next week. Let's get rid of that one. That's next week. We want this week. Okay, and the 6 is right there. So we're going to do the 6. We'll do just one contract. One contract is going to allow me to show you what one should look like. And then we're going to crunch the numbers. Are you ready? Here we go. Here's the numbers. Buy one covered call of Archer Aviation. 8 May, which is this coming Friday. Well, fine. 8 May. I'm looking at a $27 profit per contract. Okay. Well, each contract's going to cost me $573. Doesn't really tell me what the rate of return is. Okay, Johnny, don't be doing that. I don't approve of that, okay? Alrighty. What is going on here? No. So let's try this one more time. Give me a second while I tend to this. Block account. I don't like it when people do this kind of stuff. Okay. All right, let's get this thing settled right about there. Can I see okay? All right, there we go. You can see fine. All right, so this is what the numbers look like. When I'm looking at something, I want to make sure, what am I buying? Well, number one, do I like Archer Aviation? That's the very first question. Okay. Number two, if I'm buying it at 586 and selling it at 6, what kind of rate of return am I getting? Why invest in dividend stocks over bonds? Because I haven't seen a single bond that offers over 40%. I'm looking to get 50% every year. Bonds don't do that. If I invest in the stock, buy it at 590, sell it at 6, do it again next week and the week after, every single week I get 1%. That's what I'm looking for. 1% every week. That comes to over 50% by the end of the year. That works for me. So you got to find something that works for you. If you like bonds, great. I have never seen a bond over 30%. Okay, now I have bonds that I'm going to offer at 20%. If you want to, that's one of my bonds, 20%. All right, anyway. I've been missing you. Eric, thank you. When do you get back on a normal schedule? Well, we're just outside of Vegas. Okay, we're taking the Route 66 trip. Okay, tomorrow we're supposed to go to the Grand Canyon, if everything's okay. Then from there, we'll slowly plan our way back east. We'll get there eventually. I got 100% in a year holding FSELX. Yes, lovely. Can you do that every year with every position that you do? Probably not, because companies like that, I saw it, I took a look at it, not when I'm looking. It's not safe, it's not predictable, it's not consistent, and it doesn't give you dividends. So there's only 2 stocks available, only 2. One is called a growth stock. You put your money in and it slowly grows. Okay, so I can get my money out at some point in the future. That doesn't work for me. I'm 62. I need cash flow. So the second set of stocks is what called income stocks. The income stocks, well, they pay you a dividend every 90 days. I'm okay with that because what time zone am I in? Well, right now we're in the Pacific time zone. Normally I'm on the Eastern time zone, but considering we're traveling, no. Would you prefer SCHD or JEPQ? Neither one. Neither one is consistently profitable. We're going to take a look at that in a second. Let me finish up with this first. Then I'll take a look at SCHDE and JEPQ. When I'm done, you might not like it. Just to let you know ahead of time. SMR looks good to me. What do you think? I actually have some SMR. Sit tight. We'll go to that one. Thanks. All right, hold on. I'm going to hold this right here. And I'm going to pause that one right there. Let's take a look at the numbers for Archer Aviation and see if it makes sense. Because we looked at the chart. The chart looked good. Now what I want to do is I want to see, is this profit going to be more than 1%? Because what I'm looking for is A, B, C, 1, 2, 3. I got a system that goes A, B, C. Number 1, does it have dividends? Number 2, is it consistently profitable? Number 3, is it time to buy now, or do I need to wait? That's what the chart tells me. Well, the chart tells me it's a good time to buy. Now what I got to do is find out, is the number going to be right? I'm looking for 1%. So let's see what this trade, this is a 1-week trade. Jump in tomorrow morning, jump out by Friday, grab my 1%. So for that, I'm going to need my calculator. And my calculator is telling me profit 27, Going to divide it by the investment, okay? Maximum profit, 27. Cost of the trade, including commissions and fees, $573 per contract. 1 contract, 5 contracts, 10 contracts, whatever you can do. Because you know what your situation is better. I know what mine is. You should know, as adults, you should know your financial situation at all times. Point blank, you should. All right, so 27 is the profit. What is the investment? 573. 573, and that's going to equal 4.7% for 1 week. Now, I'm looking to get 1% a week, but this is offering me 4%. All right, hold on. Okay, Eric, we can get to that. Chris, thoughts on standard deviations for futures? Now, apparently, Chris, you were not paying attention. I'm not doing futures. I'm doing dividend stock investing for weekly cash flow. That's what I'm doing. Dividend stock investing for weekly cash flow. No futures. Sorry. I did those many years ago. Lucky, how you doing today? Tomorrow, will you buy stocks? Covered calls at the same time. Absolutely. Why you always pick at the money? Why not in the money? It's always a numbers game. Okay, we're going to go over the numbers. Sit tight for a second. Now, at the money, which would be 6, because the stock is at 573, in the money would be 550. Okay, well, let's take a look at the 550. Does it make sense? Okay, well, let's change this by editing this right here. And we're going to change from 6 to 550. Okay, so hit confirm and send. Almost the exact same thing. Only one thing has changed. And that's the strike price, not the expiration date, not the stock. So here we go. Buy 1 covered call, Archer Aviation, 8 May, which is this coming Friday, the $5.50 call option. The profit is $5. So at the money, it's 27. In the money, it's 5. Do you see the difference between the profit? Now, there's going to be a profit here, but not as much as it would be at the money. So there's in the money, which already has value, at the money, which is at the money, which is at the current price. And then you have out of the money, which means the stock has to move. Okay, well, at the money is 550. And that's offering a 27, which is 4%. This 1 strike in the money. 1 strike in the money is offering $5 on a $5 stock. That's about 1%. So it depends on what it is you're looking for. Me personally, I'd go for the 6 to get that 4%. Okay, let's go back to where we were. Okay, K-Van, it's 1 a.m. What are you doing? Well, it's 1 a.m. in Florida. It's only 9 or 10 o'clock here. It's 10 o'clock here. See, I'm on Western time today. So, normally, and I am working my way back over to the East Coast. So once I get to the East Coast, I'll be back in my own little broadcast room, which I have all my own toys. Here, I'm at the mercy of the hotel. So the hotel got a TV screen, and I got to stand in the closet to do this. It's interesting, but dedication, I suppose. All right, so anyway, no to that one. Don't get me wrong, I like Archer Aviation. Archer Aviation, you want to write that one down? ACHR. Yoo-hoo. Yoo-hoo. Julie.
What?
Archer Aviation, ACHR. You want to write that down?
Okay.
ACHR.
ACHR.
Please, thank you. All right, so we did that one. Let's go to the next one. Single, there we go. Get out of that. All right, and back to there, back to there, back to there, and back to here. Now, somebody wanted to take a look at SCHD and what was it? I'm 63, need income. Ollie, I understand 100% I do. Now, Ollie, normally I'm on at 9 p.m. Eastern Standard Time. Okay? So now I'm on Pacific time, so not quite sure. So Ollie, if you want, DM me your name and information, and I'll make sure you get the invite when we're back at home. 47251437. What were your parents smoking when they named you that? Why not Bill, Ted, Fred, Oscar, Sam, Sally, Sue? I don't know. Why that number? Anyway, GIS is, give me a second. General Mills. General Mills is a monthly option. We don't do monthlies. Ollie, okay, which income stocks do you recommend? Okay, Ollie, the income stocks I'm looking at are Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on Warren Buffett's list. That's about 350 companies. Ollie, you're relatively new here. I see where you're coming from. I'm in the same boat. I'm 62. I need the income. I do. I average about 1.4% per week. My goal is 1%. So 1% every week comes to over 50% by the end of the year. That's what I'm doing. That's what I've been doing for the last over 15 years. So let's keep on going. We can take a look at Mara in a bit. Hold tight. Where was I? Right here. John. For some strange reason, Mr. John over here. Okay. John likes SCHD and JEPQ. Now, don't get me wrong, they're heavily marketed. Now, just because they're heavily marketed, saying buy this, buy this, buy this, that doesn't mean it's something good to buy. Because why do you think they market it so heavily? Think about it seriously. Okay? The marketing is just crazy for JEPQ and SCHD. Why do you think that is? Seriously. All right, let's actually take a look at the numbers, because we all know that numbers don't lie. 1 plus 1 is going to equal 2 no matter where you come from. All right, so John, take a look at this. Right behind me, this is Yahoo Finance. Yahoo Finance is going to give me all the numbers that I need to take a look at. So I want to take a look at SCHD. All right, SCHD. Come on, there we go. Right there. Schwab US Dividend Equity ETF, SCHD, electronically traded fund. So you're basically giving your money to a computer, and hopefully the computer gives you something decent. Okay, well, number one, John, the yield is only 3.4%. That's it, 3.4%. But that's not what I want to see, John. What I want to see is over here, the historical data. Okay? Historical data is going to tell me how consistently profitable this is without me having to read 20 years of quarterly reports or 20 years of annual reports. I mean, they're great, tell you a lot of information, but that's not what I'm looking for. I don't care about that. I'm a lazy trader, and I got no problem whatsoever saying that. What I want to look at specifically, John, are the dividends only. And the reason why I want to look at the dividends only is because the dividends are a portion of the profits that the company gives to the investors. And that's us. We are the investors. We buy, we sell. We are entitled to a portion of the company's profits. So for SCHD, I want to look at all the dividends. Let's see how far back they go. 1870, 2011. You see that, John? The December 19th, 2011 was the very first dividend that SCHD paid. Now, simple math will tell me 2011 to 2026 is only 15 years. Okay, if you're okay with 15 years. Now, when I say consistency of profitability, I mean that every single year or every single dividend should go higher and higher and higher and higher. That's consistency of profitability, in my opinion. Because to be more profitable this year than last year, well, that's a good thing. And then the year before, well, that's a good thing. So if every year I make more money, that's what I'm looking for. So John, hypothetically speaking, each one of these numbers going forward. December 19th, 2011, okay? And then to March 19th, 2012, and then to 2013, 2014, those numbers should go higher and higher and higher because every company is looking to do the exact same thing, to make more money this year than they did last year. Nobody wants to make less money. You know what? Let's go to work. Let's make less money this year than we did last year. Who the hell wants to do that? They're looking to increase their profits year after year after year. That's what we're doing. Okay, so let's take a look at the very first one, 4 cents. Right there, 4.0, 4.6, 6.8, 6.9, 8.6, 6.6. Wait a second. Why is that one less? Okay, higher, 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 lower. Higher, 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 lower. Higher, let's go up. Okay. Lower, higher, lower, higher, lower, higher, lower, lower, higher, higher, lower. See the problem I have here with SCHD? Lower, higher, lower, higher, lower, higher, higher, lower, 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 higher, higher, lower. Do you see the problem? It's not consistently profitable. Let's take a look at JEPQ. I can almost guarantee it's the exact same thing. Let's do this. JEPQ. Are you ready for this one, John? Okay, here it is right here. JP Morgan, NASDAQ equity, where is it? Premium income, ETF, JEPQ. Another electronically traded fund. All right, so here we go. All the way back, 2026, 24, 23, 22. Okay, so I got a major problem with this one, John. Major problem. June 1st, 2022 is the very first dividend. That means this company's almost 4 years old. 4 years old, John. I got a major problem with that. Why am I going to put my money into a company that's 4 years? Most companies don't make it past 3 to 5 years. That's the breaking point for most companies, 3 to 5. This one's not even 4 years yet. Let's take a look at the numbers. 3.7, 3.4. Wait a minute. Okay. Lower, higher, higher, lower. Higher, lower, higher, lower, lower, higher, higher, lower. So right there. Lower, higher, lower, higher, higher, lower, lower, higher, 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 lower, higher, higher, lower. John, it's not consistently profitable. Why are you putting your money into a company that's not consistently profitable? It boggles my mind. It really does. I have 5 simple rules. Okay, number one, I have 5 criteria. So the trading strategy I'm showing you, I created for my 9-year-old daughter back in 2008. Well, in 2008, she wanted to learn how to invest in the stock market. Great. So I had to create a strategy specifically for a 9-year-old little girl. Simple, safe, predictable, consistent, and no way to lose. That's the strategy I created. So I got 5 simple rules. Very simple. Number one, never buy something you do not want to own. That's number one. If you don't understand it, if you don't want to own it, you shouldn't buy it. Rule number 2, never sell at a loss. It defeats the purpose of the game. Number 3, this is the one you're stuck on, John. Number 3, make sure the company is consistently profitable. Okay, when I say consistently profitable, I mean each and every entry should be higher and higher and higher. 1 second, John, check this out. See that? Microsoft. Let's go all the way back to 2006, because that would be 20 years. Okay? 20 years ago, 2006. Here we go. You ready? Watch this, John. 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. Did you notice that, John? Each and every single dividend was higher than the previous dividend. Higher and higher and higher is what I'm looking for. Navarre wants to take a look at, is that McKesson or is that, what is that? Let's find out. MKC, I think that's MKC. McCormick, damn it, McCormick or McKesson, one or the other. Now, McKesson is a weekly, McCormick is a monthly. I don't do McCormick, and the reason being, rule number 4, weekly options only. May, June, September, December, January. Before I go on any further, I forgot, and I apologize. I apologize to everyone. I forgot to tell you, the screen behind me is live on YouTube. So if you can't see these little tiny numbers over here, you can on YouTube. You can go to the big screen TV in the other room. Pull it up, put it up on YouTube. The 10-Minute Trader. Okay? That's where we're from. Dividend Stock Talk brought to you by the 10-Minute Trader. Okay, so I'm going to say no to McKesson. I'm going to say no to SCHD. And I'm definitely saying no to JEPQ. Sorry. All right, lucky we got to that question, right? All right, what do we have next? Which platform broker do you use? I use Think or Swim is the platform, and the broker is Charles Schwab. Okay? Don't get me wrong. I'm not too fond of Charles Schwab, but I do like the Think or Swim trading platform. Make it very challenging for me to get what I want out of life. Done. Thank you for that. Eric, SMR. SMR. Now, I do have some SMR. First thing I want to take a look at, as always, is the 1-year chart. I'm looking for 5 things. Are you ready? Number 1, the high. Number 2, the low. Number 3, where was it a year ago? Number 4, where is it now? And number 5, what is the motion? Up, down, up. What's going on right here? Well, right here, the last 30 days, same thing. Same 5 things. The high, the low, where was it? Where is it? What way is it going? So it went up, down, now it's going back up again. Great. Well, I love SMR. But my concern is what's going to happen on Monday. Because I want 2 days to the upside, and then I want to jump in. Well, we bottomed out on Wednesday. See, 2 weeks ago, we had the 30-day high. Now it came down to here, and now we have 2 days up, which was Thursday and Friday. So what's going to happen today? Well, today, if she goes up higher, yeah. Today, which is Monday, because we are into Monday. Okay, did that one. All right, so let's take a gander at it. Right now, it's at 12.14. At 12.14, most likely, I would do the 12s. So let's get rid of this. Let's bring up this right here. Covered calls, and let's look at the 12s right here. This is what the order looks like. And this is what it should sound like. Are you ready? Buy 1, covered call, SMR 100s. That's the weeklies. May 26th, that means it's going to expire this coming Friday. Okay, fine. Now, 78 is the profit, 1100 is the investment. Let's get that calculated to find out what is the rate of return. Okay, great. Let's clear this out of the way. 78 is the profit. We want to divide it by the investment, which is 1122. All right, $1,100 for a 6.9. How can that be true? 6.9. Julie.
Yeah.
SMR. Write that down, please. Thank you.
Fox, Mike, Romeo.
Samantha.
Okay.
Monday. Rudolph.
Okay.
SMR.
Okay.
Okay, so if it makes sense to you, who came up with SMR? Eric, nice pick. So SMR, if you like it, and remember, it already had 2 days up. I want the 3rd day. Okay, so let's get out of this one. Let's get out of that. Let's get out of that. Let's get it back to this. And let's let's go back to that right there. Okay, so that was SMR. Great. I just got back from PCB, Best Vacation. Okay. Nick, you later. How you doing today? Nice to see you. Hummingbird. Interestingly, SCHD has its place just like bonds. K-Van, I'm going to agree with you 100%. It does. Okay, now these ETFs, they have their place and they have their audience. So you have to ask yourself the question, do I like SCHD and JEPQ? I mean, granted, the returns aren't as great as 1% a week, which would be 50% per year. Okay, what is SCHD? What are they offering? 3 point something? Nothing wrong with that, if that's what you're looking for. Can't see, what is it? Go Puff Guru. Okay. Abundance dollar. Thank you. Okay, you can't see? All right. What is it that you can't see? SMR. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at the motion. Up, down, up, down. Now it's going back up again. Okay. Well, that works for me. Ask yourself the question. Do you like SMR? Is this something that you want to buy? Something you want to hold? Or something you just want to trade with? All the questions the same. Is that from rebalancing? No. Okay. This is why I thought SHD was perfect. It holds Dividend Kings. Yeah, John, it does hold Dividend Kings. But if you separate the Dividend Kings and did them individually once per week, well, 1% every week is 50% by the end of the year. Why would you give the money to a computer and let the computer tell you what you're going to get? Because at this moment in time, SCHD is offering 3 point something percent, less than 4. Okay, I'm showing you how to get 1% every week. Now that's a little bit better in my opinion. Okay, that makes a lot of sense. So the numbers should continuously grow. Absolutely. Think about it. If you're going to put your money into an investment, don't you want it to grow year after year after year? I mean, granted, they say stocks go up, stocks go down. Well, why would I want to buy a stock that's going to go down? If I buy it, take it for a little ride, jump out before it hits the top. Now, you may decide what numbers work for you, but the number that works for me is 1%. So as soon as she starts going up, I'm jumping out because you never know where that top is going to be, just like you never know where the bottom is going to be. It's nothing but a guessing game every day. But we get clues. Well, the clue is 30-day bottom. It's cheap. Let's buy it. Great. We buy it. Now, all of a sudden, it's at the high. Well, that's a little bit pricey. Look at the big profit. Because she went from 850 to 14. Now, you may not know this, but from 850 to 14 is $6. $6 on an $8 stock is a 75% increase. So she jumps up 75%. Well, great. I want my profits. Take my profits, and now she drops. Well, now we're at 1075. Now we're going back up again. So from 1075 to 1215, that is $1.50, which is 10% right there. That little tiny move is about 10% move. Great. Well, if I'm jumping in tomorrow, I want to get in and get out before they take profits again. Because I don't want, well, don't get me wrong, I'd love to get 75%, but the higher and higher it goes, the more risk you take. More risk, more reward. There's nothing wrong with it. I would prefer less risk, less reward. Because less risk, less reward comes to 1 to 2% every single week. And 1% a week is 50% by the end of the year. 2% a week is over 100% by the end of the year, depending if you're compounding or not. Now, me, I don't really compound because I use that money to pay my bills. All right, what do we have next? Coach Dillard, I was just looking at stocks that shows dividends. I just tuned in. Well, it's nice to see you. Now, I do show every night, Sunday, Monday, Tuesday, Wednesday, Thursday. I take Friday nights and Saturday nights off. But for the most part, I do the same thing, night after night after night, looking for good quality companies that'll give me a 1% return for 1 week. That's 50% by the end of the year. You're new here. stop by. I'm not going to try to sell you anything. It's not like at the end I'm going to say, hey, I got the great deal for you. I do. I mean, we're all adults. We know how it works. I've written a bunch of books. I do seminars. I do online training. I do all that kind of stuff. But I'm not here to sell you any of that. If you want to buy it, fine. Go to the website. Do what you want to do. But here, I want you to ask questions. I'm looking how to improve what I'm doing. Okay? So, next question. All right. John, okay, that makes a lot of sense. So the numbers should continuously grow. Absolutely. Is that from rebalancing? No, not at all. I definitely see the issue. Thank you there, John. I'm basically here just to teach you. If you want to join, great, join. You don't have to if you don't want to, but I'm here every night. So that being said, let's find something else. Ooh, Eric wants to take a look at the gap. What's the OF? The OF, you got to be more specific because OF could mean almost anything. But Eric wants to take a look at gap. Fall into the gap. I like the gap. Okay, interesting. Now, anytime I take a look at a chart, I'm looking at the exact same things. Always, always, always. Where's the high? Where's the low? Where was it a year ago? Where is it now? And then you just follow it, okay? Up, down, up, down, up, down. What's going on right here? It looks like she's turning. So with that being said, I want to zoom into that. It's exactly what she did. Look, she jumped up, found the 30-day high. All your profit taken brought us down to here. Now we have 1, 2, 3. Right there. So the gap looks good. We're currently at 24.68, so I'm looking at the 25s. And the 25s are paying 44. That's 1.5%. If you like the gap. And sorry, it comes down to that. You have to actually like the company you're investing in, or it makes no sense. All right, so let's get rid of this. Let's do another trade on the gap. All right, let's get rid of this. What are we doing? Right there. Doing the covered call again, right there. And we're going to do the 25, which is right there. Just one contract, if you don't mind. Gives you a good idea how many you can do. Because once you see the numbers for one, you'll know if you can do 5, 7, 11, 33, 72, HUD. All right, anyway, here we go. Buy one covered call gap, 100, that's the weeklies. 8 May, that means this option is going to expire this coming Friday. The $25 call option, well, it's a $79 profit, $2,400 investment. Let's get the calculator, find out what rate of return that is. So let's clear this. The profit, 79. Right there, see, max profit, 79. Okay. Now we're going to invest it by the investment. Cost of the trade, including commissions and fees, $24.21. Okay, it's like $2,400. Well, let's find out. Let's divide this. $2,421, and that comes to a grand total of 3.2% for 1 week. Think about it. If I buy this first thing in the morning and I sell it for the same price I pay for it using a covered call, that means I know what my profit's going to be before I even do it. And the only thing the stock needs to do is stay above 25 before Friday comes. And then I collect that 3.2% immediately. So if I buy the stocks tomorrow morning, I sell the covered call. As soon as I sell the covered call, I pick up that 3.2%. Well, that 3.2% is $79 per contract. So one contract is $79. 5 contracts, well, it's $79 times 5. So think of it this way. Think of it as a vending machine. Now, interesting things about vending machines is you got to pay for them up front. Great. Well, this vending machine is $2,400, and this vending machine is giving me $79 this week. Well, next week it might give me more. It might give me less because once I own it, okay, $24.21, I can do whatever I want with it. And I can sell a covered call every single week to bring in that money. Now, I've traveled a lot in my days. I've seen vending machines that vend wine, cheese, mustard. That was in France. I hear in Texas, they have vending machines with ammunition. I shit you not. Okay? And then they also have vending machines for snacks, sodas, stuff like that. There's a lot of vending machines out there, but it's still a weekly cash producing asset. I pay for it once, and it allows me to get a consistent cash flow on a weekly basis. But it is going to take 5 or 10 minutes every day. Terribly sorry to burst your bubble. You have to do something. No one is going to give you money for free. It just doesn't work that way. You got to put some effort into it. So 5 or 10 minutes a day gives me 1% a week. That's over 50% by the end of the year. 1 hour of my time is worth 1%. That works for me. It does. All righty. GME. Sorry, Mike. GME is GameStop. GameStop, I don't think the dividends are really that good. Let's find out. Okay, GME. We're back over at Yahoo Finance because I'm a firm believer if you're going to be investing in any type of, holy cow, GameStop does have dividends. Let's check them out. All right, so the very first dividend for GameStop is in 2012. 3.7. That's it, 3.7. Okay. 2013, 6.8. 2014, 8.2, 2015, 9, 2016, 9.2, 2017, 9.5, 2008, well, nope. You know why I'm saying no? They stopped paying dividends in 2019. They are no longer a dividend stock. So, no, sorry. Sorry. Next, no to GameStop. Mike, okay. Apes strong together. I have no idea what that means, Mike. Apes strong together. No idea. Sorry, I'm a little bit on the old side, so I'm not quite sure of all this weird new age talk. So Habu wants to take a look at SIDU. Okay, SIDU. Okay, never heard of them, but let's take a look. SIDU. Cetus Space Inc. No, wasn't that quick? It wasn't even 2 seconds. And you know why it wasn't even 2 seconds? Because I don't do monthlies. May, June, August, September. Those are months of the year. So let's do some simple arithmetic. You ready? Monthly option, 12 times a year. That's it. There's only 12 months. Monthly option, I can only trade it once a month. 12, that's it. Weekly, there's 52. So if I'm getting 1% for each trade, why would I do monthly and only collect 12% by the end of the year? Why not do weekly? Because 1% a week is over 52% by the end of the year. Sorry, I don't do monthlies. They just don't work for me. Okay. K-Van wants to take a look at Harley Davidson. K-Van, how's it going, brother? Yeah, I should be back home in about 2 or 3 weeks. Who knows? I'm on one of those crazy, they call them a Gardena road trip. And they're kind of interesting because a lot of weird stuff happens during those. All right, anyway, Harley Davidson, simple. You ready? High, low, where was it? Where is it? Look at the motion. Sideways, up, down, up. Okay, great, lovely. So this one's probably going to be a no, only for the reason is, check this out. Really look at the numbers. 30 days ago, we're at 17. We jumped up to 25, pulled back a little bit, and jumped back up again. That's the high of the 30-day period. Okay, she jumped up, profit taken. Now she got 1, 2, 3, 4 days up. 24.50 to 24.50 is going for 95. That's over 3%. All right, well, let's take a look. Let's get rid of this. Let's change this to covered calls right there. And we're going to look at the 24.50. Is that correct? The 24.50 right there at the money, one contract. Now, we all know Harley Davidson's been in business for over 100 years. If you like Harley Davidson. Okay, well, let's take a look. Okay, buy one covered call, Harley Davidson, 8 May, which is this coming Friday, the 24.50. Well, she's at 24.48. So if I buy it at 24.48, sell it at $1.50, I collect 2 cents on the stock. That's not what I'm looking for. What I'm looking for is the premium payment, and that's $117 per contract, $2,300 per contract. So let's find out. If the profit's $117 and the investment is going to be $23, $33, it's going to give me a grand total of 5%. Want to write that down, honey? Harley Davidson, 5%. So Harley Davidson, 5%. If you like Harley Davidson, and it's always going to come to that last question. If you like it, just because it makes sense and just because it gives me more than 1% for the week, do I like Harley Davidson? Let's take a look at Mara. Who wanted to take a look at Mara? Hold on, let's get rid of this. Get rid of that. Back to this. Back to that. And Mara is next. M-A-R-A. Yeah. Gotta love it. All right, simple. See the chart? The high, the low. Where was it? Where is it? Up, down, up, down, up. Okay, let's zoom into that right there. Interesting. Okay, she dropped, went up, dropped, back up again. She's at the 30-day high, and I don't buy at the 30-day high. Sorry. Don't get me wrong. I already own some Mara, but I wouldn't be getting into a new position because it just doesn't look right at the moment. Okay? She bottomed out here, shot up, pulled back. Now here, now it's at the 30-day high. I don't like buying at the 30-day high. It never goes my way, so I just don't. There's too many other good companies to worry about to do this one. Next, Sony. Eric wants to take a look at Sony. S-O-N-Y. I think Sony's a no for a certain reason. Well, I guess not, huh? All right. High. Low. Where was it a year ago? Where is it now? Up, down, up, down, up, down. Doesn't look that good unless, of course, you're looking for it to bounce. Well, that didn't work out, now did it? Let's try that again. Okay, so here is Sony. What do you think? High, low, where was it? Where is it? Shut up, down, up, down. Now she's bouncing right there. But I want 2 days to the upside. On the third day, I jump in. Okay, I only have 1 day. So we'll take a look at this again on Wednesday. Okay, Tuesday. No, take a look at it again on Tuesday. AMTX, Angel. AMTX. No. Angel, I said it before, I don't do monthlies. May, June, July, October. No, no, and no. Sorry. Eric, the Awful. MP. Okay. Okay. MP Materials. Interesting. The high, the low. Where was it? Where is it? Look at this. Up, down, sideways, up. What's going on here? What's going on here? Last 30 days. Okay. Interesting. Bottom, shot up, pulled back. Now she's going up again. Okay. Well, what does that look like? Because we got 1, 2. If tomorrow she opens up higher, it's going to be a yes. So the 67s are going for 284 if you actually like this company. I have no idea who they are, which means they probably don't have dividends because I only do stocks that have dividends. I've never heard of this one. So let's take a gander. The 67s. Okay, let's change it to covered calls right there. The 67 right there. 1 contract. Just one. There it is. Here we go. Are you ready? Buy 1, covered call, MP, which is MP Materials. 8th May, which is this coming Friday. The $67 call option. The stock is at 66, 63, so it's pretty close to 67 already. 204 is the profit, 6,400 is the investment. What does the rate of return look like? Ollie Gold, we already looked at SMR. Thank you, Ollie, but we did. We already looked at SMR. So 204 is the profit right here. Whoops, I don't want that. Max profit, 204. The investment, cost of the trade, including commissions and fees, 6,500 bucks. Okay, so 204 divide 6,500 gives me a grand total of 3.1 if you like this company. And that's basically that's all there is to it. Like, do I like the company? It's a yes or a no. Okay? K-Van, MOS. I love Mosaic. I do. Let's take a look at Mosaic. Just for K-Van, we'll take a look at Mosaic. An MOS. There we go. Here we go. Interesting. Take a look. Here's the high of the year. Here's the low of the year. That's where we were a year ago. This is where we are now. Up, down, what's going on right here? That's what I want to see. I want to zoom into that, see what's going on. Well, your 30-day high, 30-day bottom was Wednesday. Thursday was higher. Friday was higher. So if this thing's higher one more day, which is tomorrow, Monday, well then, yeah, I want to take a look at it. Well, right now, she's at 23.15. I'd go for the 23s. And the 23s are paying 60 cents. Well, that's over 2%. If you like Mosaic. Isn't it? There's always a catch, isn't there? Well, do I like Mosaic? Well, yes, I do. By golly gee, I like Mosaic. Get that out of the way. Change this to covered calls. There we go. The 23s, because that's where we are right now. Right there. No, I don't want that. The 23. Right there. One contract. There it is. Confirm and send. There we go. Here are the numbers. You ready? By one covered call, Mosaic, MOS, May 8th, which is this coming Friday. So whether you like it or not, Friday's coming. Seriously, you think I want to be 62? Hell no. I prefer to be back in my 20s. As crappy as it was still better than it is in the 60s. Because you have so much going for you. In your 60s, it's less and less and less. Anyway, so 50 is the profit. The investment is 2,200. Let's see what the calculator has to say for that. Calculator, 50 bucks profit divided by the investment in this situation, 2250 comes to a grand total of 2.2% for 1 week if you like Mosaic. It's as simple as that. Find a company that you like, a company you're willing to put your money on, and then just watch it. They do two things. That's it. They go up, they go down. That's it. They don't come to your house. Don't cook your dinner. Don't take the dog for a walk. They go up, they go down. That's it. Okay? Next. Oh, 2.2. Ooh, you want to write Mosaic down?
Yep, I heard you.
MOS. I said a MOS, a TER, a G, double E. All right, let's back to where we started from. There we go. Here we go. Now, we just looked at Mosaic. Fine. Lovely. Eric the Awful, thank you for that. GG, what's the theory behind the 30-day high? Check out weekly on SoFi. Thank you, GG. Let's take a look at SoFi. And then I'll tell you why I don't like SoFi. Okay, GG? SoFi is another one that they're ramming down your throat saying, buy, 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 buy. Yeah. Okay, so here we go. SoFi. High of the year, 110. Low of the year, 84. Wait a minute, no. Low of the year is like 82. Whoa. Okay, a year ago, we're at 86. Here we drop, back up, back down, back up, back down, blah, 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 blah. Here we are right here. More than likely, it's going to be a no because I don't buy anything at the 30-day high. 30 days ago was, okay, we're right about there. Okay, there's room to grow. Let's take a look at the numbers and see if you agree with them. Okay, 30 days ago, we're at 97. We jumped up to 98, dropped like a rock $6 jump. $6 jump on a $90 stock is not even 10% yet. It's like 7 or 8%, something like that. But does it have room to grow? Yeah, it does. Now let me show you why I don't like SoFi. Okay, SoFi right here. All right, SOFI. If you didn't know, I'm here on Yahoo Finance. Yahoo Finance is a website that gives financial information on the companies. And what is it saying about SoFi? There are no dividends in the selected time period. So the only way I'm going to figure out whether or not SoFi is profitable is going to the summary and checking out the earnings per share. What are they? What do they look like? Are they profitable? Are they not profitable? Well, the dividends, and there's a reason why I do dividends, because dividend stocks have a tendency to be repeatable, which means they do the same things over and over again. Wow, it's taking so long to go to that thing. Okay, here we go. SoFi Technologies. Earnings per share, 45 cents. So now, if I really like SoFi, I would have to go back and look for the quarterly reports and annual reports. But there's a reason why I look at dividend stocks. And let me show you that reason, and then maybe you'll say, oh, that makes sense. Because it kind of does. You ready? All right, so we're going to Market Watch. Here we go. Now, what you see behind me is just your regular calendar with all these little green dots. Now, all these green dots represents companies that pay dividends. Remember, I told you there are two different kinds of companies. You have growth stock, and then you have companies that have dividends. Okay, so there's a difference between a growth stock and a dividend or income stock. An income stock, they will pay you money every 90 days in the form of a dividend. So if the company's profitable, they share those profits. Those are growth companies, represented by the little green dots. Now, the other companies are called growth. They take all the profits, put it back into the company, and it grows. Well, the income stocks, the dividends. The reason I like dividend stocks is because, you see these little green dots? Johnson & Johnson, PPG, West, Consolidated Edison, Target, Aflac, Genuine Parts, Lennar, IBM, Walmart, Smuckers, ExxonMobil, Sherwin-Williams, so on and so forth. They consistently increase the profits, and they're predictable. So what we're looking for is the month of May. Okay, the month of May is the 5th month of the year. Well, there's 12 months, 4 quarters, April, May, June, first quarter. Sorry, January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. So, Johnson & Johnson pays their dividend on the 8th week of the quarter. 8th week of the quarter. First quarter, second quarter, third. Every 90 days, every 13 weeks, Johnson & Johnson pays a dividend. They are predictable. They do the same things over and over and over again every 90 days. Now, every 90 days may sound like a lot, but think about it. There's 11,034 different companies to choose from. As a matter of fact, let's go and take a look right now. Find out exactly how many there are. The number changes every week. So let's find out. Do this right here. And we're going to look under FinViz, which is FINVIZ. FinViz.com. There we go. And what I want to look at specifically is the screener. Because the screener gives me this number right here. I look at this number every Sunday night. And for this night, there's 11,040 different companies that we can choose from. Now, you can dive more into this. Look at the indexes, the yields, the average volume, target prices, a whole bunch of interesting stuff you can find. And it's free to use. Okay, fine. I just use it to tell me how many companies are available. So this week, 11,040. Okay, fine. But I'm looking at companies that are consistently profitable. SoFi isn't not a $90 plus, though it's at 16. Okay, I'm not quite sure what that has to do with anything. The price of the stock has nothing to do whether or not the company's profitable or not. Whether it's $16 or whether it's $90 is irrelevant. Is the company profitable or isn't it? SO is Southern Company. SoFi, SOFI. Yeah, I see it. 16 bucks. Okay, 30 days ago. She dropped, went up, dropped again. Now she's going up again. If you like it, it's a great time to buy. If you like it. I'm just saying, they don't have dividends. So normally, I don't buy it. K-Van, Coles needs to move. Yeah, Gigi, I see that. Eric wants to take a look at BBWI. Isn't that Best Buy? Okay. K-Van wants to take a look at Coles. Now, I do have some Coles. It's one of my favorite. I do it every week, only because it keeps paying me every week. Well, here's the numbers. The high, around 25. The bottom, went around 6. Shoots up, drops, shoots up, drops. Interesting. So it goes up, down, up. Where are we right now? Well, right now, we're right about here. Bottom, top, back down, back up. Here's our 2 days right there. 1466. I've been looking at the 1450s, and those are going for 58. Well, that's over almost 3%, right? All right, so let's get rid of this. Let's see if I can do this way, right here, and get rid of that. Change this to covered call. There we go. And we want the 1450s right there. One contract. It's always the same thing over and over again. You know? So here we go. What is that damn thing? Coles. Buy one covered call. Coles, KSS. 8 May 26th. That's this coming Friday. 1450 call option. Profits 46. Investment 1404. Well, let's get out the calculator. Calculator. Clear that. 46 is the profit. There we go. Divided by the investment, $1,404. Gives me a grand total of 3.2. Coles. I need to write Coles down. All right, so I like Coles. It's on my list. Works for me. Let's go back to where we were. There we go. And here we go. Okay, so Coles. Yeah, I like that. So Eric wants to take a look at BBWI. BBWI. Here we go. Interesting. Definitely interesting. Check it out. The high, the low. Where was it a year ago? Where is it now? What's it doing? Up, down, up, down, up, down, up, down. What's going on right there? For that, we zoom in. And there you have it. Same thing. The high, the low, where was it? Where is it? Look at this. Sideways, up, down, up. There's your 2 days right there. BBWI, 1921. The 1950s are going for 40. That's over 2%. Honey, BBWI. Julie.
Hear you. BWI.
And what was the other one?
Mosaic.
And the other one?
Hang on.
See, you weren't paying attention.
I say hang on.
No.
Mosaic. Before that was Harley Davidson.
And?
Before that was SMR. Before that was ACHR.
What? ACHR.
ACHR.
Yes, but you forgot about Coles.
Oh, Coles. I forgot.
That's why you write it down. Anyway, all right, so BBWI, great. Well, let's see what it looks like. Is that Bed Bath & Beyond? Yes, it is. Wait a minute. Bath Body Works. Oh, imagine that, Bath Body Works. Okay, so we're looking at the 1950s right there. Okay, nope, I want covered call first. Change that, there we go. 1950, there it is right there. One contract. And here we go. All right. Buy one covered call, Bath & Body Works. 8 May, which is this coming Friday. The 1950 call option. 74 is the profit. 1800 is the investment. Calculator, if you don't mind. Where is it? 74, right there, divided by 1876. 1876 comes to the grand total of 3.9. Honey, BBWI.
I got it.
Got it. All right. So, Bed Bath Body Works, 3.9%. If you like Bed and Body Works. So, Neighborly wants to take a look at Tesla. Now, Tesla doesn't have any dividends, but here's the thing. Rules are made to be broken if you really like the company, and depending on what the company's future looks like. Okay? You can't get away from it. So let's find out. Tesla, TSLA. Now, I have some. TSLA. Now, normally I wouldn't buy it, but you can't get away from it. So here we go. Take a look. The high, the low. Where was it? Where is it? Up, down, up, down, up, down, up, down. What's going on here? Well, simply put, take a look at this movement. Okay, the high, the low. Where was it? Where is it? Down, up, down, up. You can't mistake that for anything else. We're currently sitting at 390. Okay, so what do the 390s look like? Well, the 390s look like $9. That's over 2%, right? So why not? Let's find out. Now, this one's going to hurt a little bit because it's $390 a share. All right, so change it to covered call. Right there, the 390s. Right there. Down to one contract, there it is. And you asked for it, here it is. Buy one covered call, Tesla, TSLA. 8 May, the 390 call option. 620 is the investment, 38,000. Sorry, 620 is the profit. All right, so 620 divided by the investment, 38,380. 30 divided by 38,380 is going to give me 1.6%. If you're okay with it. There's always going to be that last question. Number one, does it make sense? Number two, do I like this company? Sam, what's going on, Sam? CELH. Is that Celsius? Celsius? So, if you like it, great. CELH. Let's try that one. All right, let's get out of here. Let's get out of there. Let's go over to there. Now, all the way over. There we go. CELH, really? CELH. Celsius. Okay. Interesting. High, low. Where was it? Where is it? Up, down, up, down. What's going on right here? Let's zoom into that. Last 30 days. Same thing. The high, the low. Where was it? Where's it? Down, up, down, up, down, up, down. Now it's going up. 3 days up right there. So tomorrow looks good. If you like it. 33.73. I do the 34s. 34s paying $2. You know what that means? At $2 on a $33 stock means they don't have dividends. Normally. That's what it means. I understand. I was asking your thoughts on a weekly for SoFi. Okay, Gigi, my thoughts for SoFi is I don't like them because when, it's not an if, Gigi, it's a when the stocks go down, I'm not getting anything. Okay, so I don't buy stocks that I'm not collecting something from because I'm looking for cash flow. And if SoFi doesn't give me cash flow, why would I buy it? And then I have to look at 20 years of corporate earnings reports just to see if they're consistently profitable. Thank you, though, Gigi. I appreciate that. All right, so Celsius at 34, the 34s. Right there, covered calls, the 34s right there. Okay, one contract. And what does that look like? Here we go. One contract. You ready? Buy one covered call, CELH. 34 calls, 246 to profit, 31.54 is the investment. It sounds like a good number. Let's check it out. Okay, profit, 246. 246, and we're going to divide it by the investment. 31.54, 31.54 comes to a grand total of 7.7. Holy shit. Now, you do remember that Celsius doesn't have dividends. Normally, I wouldn't do it. Same thing with SoFi. I normally wouldn't do it because they don't have dividends. Okay, not old enough. All right, so let's get out of that one. Let's get out of that one. Go back to here. Let's go back to there. Okay. Think about that, Gigi. Navarre wants to take a look at Tractor Supply. TSCO. TSCO. Interesting. Now, only reason I'm saying interesting is you really got to like this company because look, we're at the bottom of the year and you've heard it over and over and over again. To make money in the stock market, you buy low and you sell high. Well, you can't get any lower than the low of the year, and there it is, right there. So, down, up, down, up, down. What you going to do now? Okay, well, let's zoom in. Okay, basically went sideways for a couple of weeks, big drop, and had the bottom on Friday. Now, I wouldn't touch this thing until she turned around and started going back up again. If you like the company. And it's always going to come back to that. Do you like it? Okay. So, Cabely, thank you for that. Moses wants to take a look at AT&T, which is a plain old T. There we go. Here we go. AT&T. High, low, where was it? Where is it? Up, down, up, down. What's going on here? Well, high, drops, back up, back down, back up, back down. Nowhere. This thing's going sideways. I stay away from anything going sideways only because you have no real direction where it's going. Navarre. Are the high percentage ones we saw today too risky? Should I stick to stocks like Coca-Cola? Coach Dillard. I'm in Texas too. DFW. Dallas-Fort Worth. Cool beans.
You're not in Texas. You're in Nevada.
I didn't say I was in Texas. He said he's in Texas.
Oh, okay.
Okay. So AT&T is going to be a no. Now, Navarre, you have to decide. The rate of return has nothing to do with whether or not you like the company. Okay, the rate of return is what the numbers look like. Whether or not you like the company is whether or not you like the company. It's like Coca-Cola. They've been around for 140 years. You have 5 decades of increased profits. That means every year they make more and more money. So this is what the chart looks like. The high, the low, where was it? Where is it? Look at this. Down, up, down, up. Okay, fine. What's going on here? See that gap right there? Gaps usually aren't a good thing. So last 30 days. I hate it when it does that. Let's try that one more time. There we go. Coca-Cola, last 30 days. The high, the low, where was it? Where is it? Look at this. Up, down, up, down. Doesn't really make sense right here because you got this big gap here. And gaps have a tendency to fill. So that baby should be coming down. Should be. We'll have to wait and see. Okay, so apparently, K-Van, I'm 3 for 3. Way to go. You got some Oracle? I love me some Oracle. K-Van, let's check it out. ORCL. Interesting. Take a look at what's going on right there. The high, the low, where was it? Where is it? Okay, up, down, what's going on there? Let's zoom in. Interesting. Okay, the top, the bottom, up, down, what's going on here? Usually going back up again, if you like Oracle. Okay, so Oracle's at 172. The 172 is going for 475, right around 3% if you like Oracle. PLTR, hell no. Come on, K-Man, you know that. has earnings. Okay, PLTR. Why not? PLTR. No, I don't like PLTR because they don't have dividends. Okay, Van, you know that because you've been here for a while. High, low, where was it? Where is it? Up, down, up, down, up, down. What's going on right there? Well, looks like a lot of movement, but what is it doing? Anything we can take advantage of? Maybe the high, the low, back up, back down, back up. Okay, this is what it looks like. Looks like she should be going up. The 144s, 146s are going for 6, yeah. PLTR doesn't have dividends, so when the stocks go down, you collect nothing. Yeah, I see that. All right, so we're at 11 o'clock, which basically means we're at 2 o'clock where I'm normally from. So we're going to call it a night, and we're going to do this all over again tomorrow. So for those of you that enjoy this, I'm pretty sure we'll be in Central Time tomorrow, all things being equal. Mountain Time? That's Central. Isn't it Eastern, Central, Pacific?
No, mountain. Eastern, Central, Mountain, Pacific.
Okay, so tomorrow will be 2 hours behind. Okay, so tomorrow we'll be in Mountain Time. So that being said, you guys have a great day. We'll do this all over again tomorrow. See you then. So let's get out of here. Let's shut this down there. And that stream. And this one. Catch you guys later, huh? That one out of there. And down. And for you guys here, let's kill these. Ciao. Have a great night. We'll do this again tomorrow. And over here, see you later.